Everybody, it is Saturday at 7:25 out here in Midway, Utah. Snow, cold, who cares? I've been up since 3 o'clock because we're building an app, and I had an amazing idea hit me at about 3 o'clock this morning. So I got up and I went to my Remarkable, and I went out and started the coffee and started writing it all out. So we're building an app for all of you over here at Approvify that you can use at the point of sale to take applications. You can calculate payments with payment factors and terms. It'll have a good, better, best tool. It's going to have Hey Chris AI chat where you can chat directly to me to ask me questions at the point of sale. You'll have the deal desk. You'll have commercial loans all from one app. We're building that for you. You asked for it. We're building it. Okay, cool. Day 10, we're waiting for an insurance payout objection. This is very roofer specific. The majority of roofers in the United States are now making their way over to the retail world. Policies, changes, deductibles, high, ACV, RCV, XYZ, the cost of repairing, Florida's policies forcing people to change their roofs. Like the whole roofing world is changing. So you're going to have a whole new paradigm shift of selling roofs in an insurance market. Here's the beautiful thing. We don't necessarily care how the consumer pays for the roof. You have the ability to finance a roof, an insurance project, wrap the deductible in, upgrade supplements, upsell the roofing system. The consumer can get the money from their insurance carrier and the mortgage endorsement or however it's sent. And then they can pay that loan off in full if they'd like. Or, I don't know, if they want to hold on to the check and take their wife to the Bahamas, I think they can do that. It's the prerogative of the consumer, how they want to pay for it. But a lot of contractors now are offering financing solutions at the point of sale for insurance projects, wrapping in deductibles and just giving them a lump sum monthly payment or a 12-month same as cash. Of course, you have to scope. You got to get close to the number, or you don't want to look like an idiot, make over promise and underdeliver. But this is a possibility. It's what's happening right now in the United States. So, understanding the objection. Sometimes it might be an objection, an obstacle. It depends how it's positioned to you. We're waiting on the insurance check before committing. That's a valid thought. We don't want to pay anything out of pocket. 100%. None of our customers have to. That's why we offer 100% financing solutions. Well, that handled that one, didn't it? There's no prepayment penalty with your financing solution, so feel free to pay the loan off whenever you'd like. When you get the proceeds back, that's a way to handle that. I'm not sure how much insurance will cover, so we're holding off. That's valid. Absolutely valid. Some of these objections are real. They're real. It's the consumer's prerogative if they want to do that. But if it's valid, it's valid. You're not always going to be able to overcome every objection and obstacle. But at least you can position the solution to let them make a better buying decision. We've got a group here in Utah that are going in, doing insurance roofing projects, and then they're doing whole home upgrades to increase the value of the home. And they're wrapping it in. So when they get the insurance, they pay off that portion, and then they've got a valuable upgraded roof system, hardy board siding, better gutters. So there's different ways to structure this. It's totally up to you how you utilize and leverage financing from Wall Street. We're worried about dealing with the claims process. Yeah, who isn't? I mean, roofers have now turned into insurance process people instead of just being a roofer. I mean, you're waiting for all this accounts receivable. The ARs are dragged out. Takes forever to get paid. There's the insurance fight, we call it. So, look, a lot of these roofers are just saying, hey, we finance the roofs. When you get your insurance check, you do what you want. Anyway, homeowners are hesitant. They don't want to pay up front before receiving the payment. That's valid. They're unsure about how much their insurance will cover. That's valid. They assume they have no financing options. Well, they no longer have to assume, because your job is to do what? Mr. and Mrs. Smith, we've got a consumer credit center. We've got experts here to help you. A lot of our clients prefer the 12-month same as cash. So when the insurance check comes in, they pay the loan off minus the deductible. Some of our customers prefer a long-term low monthly payment option. Which option sounds more interesting to you? Here's your pitch. Right, let's get down to financing advantage and what the talking points may be. Start now, pay later with financing. We're going to build the roof right now. Insurance check comes in, pay it off. The blue tarps. I bet homes in Florida are still blue tarped. Not everybody can get approved for financing. It's not going to work for everybody, but at least you've got some talking points when it comes up. Prevent further damage and additional cost. Oh man, that's a good one. It takes a long time. Is there more storms coming in, like in Florida, the hurricane season when they were blue tarping, and then more damage was done and more damage was done because the roof never got built? Locking in the price before costs increase. I talked about this, I think, in the last obstacle and objection. If you think that the cost of home improvements is going to decrease with whomever's in the White House, this is not political. This is the truth. You're probably not. Do you think that interest rates are just going to drop down miraculously? Nope. It takes a lot of time. Matter of fact, unsecured lending is a slow moving needle. They don't react like the mortgage market because mortgage is secured on the home. The retail installment contract world is just, it is what it is. For years, the 9-9-10 year was the most popular program, 9.99 interest rate on a 10-year was just the standard from everybody, from great lenders like Service and Interbank and Green Sky and Wells Fargo. So you're like, I don't think Wells Fargo, so you're like 10-year loans, they like 5-year loans in the air conditioning space, but it was like the standard. And then it went up to 12.99. And I think that price conditioning is happening now. Now, a 12.99 20-year is still a really good low payment factor. A 9.9 20-year that we have over here is like a 85 or an 88 payment factor. That's $88 per 10,000. That's a good loan with no prepayment penalty. Now, what customer wants to take out a 20-year loan? Not many of them do. They typically pay them off in 3 to 5, 5 to 7. It depends. Not many people stay in their homes longer than that nowadays. They're moving quite often. All right. Anyway, some contractors may be calling this the claim to cash program or the hold the check program. So whatever you name it and however you pitch it and present it is your prerogative. But there's some ideas on how to structure financing roofing at the point of sale for insurance. Here's some scripts. Again, I reiterate this on every single one of these. These are frameworks. Get in there and build it to your business. Take the words and build it into your sales process. The no risk financing approach, the urgency risk approach, the lock-in pricing approach, the stress-free insurance assistance approach, whatever your approach is and how you do it, feel free to leverage the financing solution where you're taking the cost of the roof, you're adding the XYZ, you're adding the deductible, you have a whole lump sum, and you're offering them a low monthly payment option or a promotional loan. That's the solution. How to train your team. Take the frameworks here. Take your sales process. Make it yours. You don't have to use it verbatim here. These are ideas. These are big ideas. Big audacious ideas on how you can build a financing solution into your roofing insurance storm restoration process. It's being done now by the millions and millions of funding each week. Beacon. I used to be their head trainer nationally and owns Corning as well. When I started the program years ago, they were doing about maybe 2.5 million a month nationally. By the time I was done with them and left and retired from service is part of the lending platform, they were up around 37.5 million a month. And all they did is what we just did here today. And a lot of those roofers that buy from from Beacon were restoration storm people that we were just training how to present financing at the point of sale. So take this deck, build it into your sales process. If you are a roofer and you are looking to, add a retail model, this has been around forever. This isn't new. You have the ability to finance roofs. You can add the deductible to the cost of the roof. You can build the roof and you can get paid. And when that consumer gets their insurance, they can pay the loan off if they'd like. That's the simple approach. You don't have to complicate this. That is the truth. Go build this into your system. We'll see you on the next call. Have a great day. Bye.